Hello traders, the title of this video is Practical Elliott Wave Flat Correction Tips and Tricks. Practical Elliott Wave Flat Correction Trading Tips and Tricks. We are on a monthly chart of G-Lead Science Incorporation. If my pronunciation is incorrect, alright, feel free to laugh, alright. G-Lead Sciences Incorporation, EPIC GILG. And we have here the flat correction. That is the orange line here. That's the A part of the flat correction. That's the B part of the flat correction. Now we are in the C part of the flat correction. Now we want to talk about practical trading tips and tricks. All right. The first thing that we want to understand is the structure of the flat correction. A lot of traders already know this, but stay with me, please. All right. It's 1, 2, 3, the bullish trend, the internal waves of the flat correction are 1, 2, 3, 1, 2, 3, which is a double retracement. All right. In normal condition, according to the Elliott wave theory. Now the reality of the market sometimes can be messy. You can see here that we couldn't see the 1, 2, 3 in this session, but the B wave of the flat correction, we can see the 1, 2, 3, but the A part of the flat correction, we couldn't see it. All right? And the expanded flat correction, we go above, okay, the high of the A part of the flat correction. Sometimes it can be equal to the high of the A part of the flat correction, and then the C part of the flat correction. Stay with me, please, because I want to highlight something very important. Is 1, 2, 3, 4, 5 down, okay? And those 1, 2, 3, 4, 5 wave down can overlap each other. The C part of the flat correction is not a multi-wave, all right? So we can have, okay, the first wave of the C part of the flat correction, all right? And the fourth wave can overlap because normally when we have a multi-wave, okay, the fourth wave should not overlap the first wave, but because it's a corrective wave, they can overlap, all right? So I leave it like this now. From the 5 wave down. All right. Sometimes we can see it clearly. Sometimes it can be down, and you may not see it clearly. All right. So what I want to add here is that the first wave, the third wave, and the fifth wave of the C part of the flat correction can be subdivided into 5 minor waves. And we need to be aware of it because it's in the direction of the price move. So the waves that are in the direction of the price action for the C wave can be subdivided into 5 also. I just want to mention that. So sometimes that a structure can fool flat correction traders, and we need to be careful. So if you look here, this is the C part of the flat correction that is starting right here. All right, so we see the first wave of the C part of the flat correction, second wave, third wave, fourth wave, and the fifth wave. But sometimes you need to be very careful. Though we have this one here, 1, 2. This move here, normally the third wave of the C part of the flat correction is usually the longest. Does not have to, because it's a flat correction, it's not multi-wave, all right? Does not have to. All right? But sometimes it can be subdivided into 5. So now that I see that you see 1, 2, you see this one here, 3 is not the longest. If it's not the longest, it does not have to be the longest. It does not have to be the longest. If it's not the longest, we need to remember that it can also be subdivided into 5. That's what I want to say. So as we see like this, 1, 2, 3, sometimes if that's the third wave of the C part of the flat correction is subdivided into 5, trader can get into a little bit of trouble because Here, trader will think that, okay, it has ended now, but then we may see a bit of move down as the price is completing the 1, 2, 3, 4, 5 of the third wave of the C part of the flag correction before we see the fourth wave and the fifth wave. I'm not saying that this is what is going to happen, but it can happen. This is about practical flag correction trading tips and tricks. But as we are talking about practical flag correction trading tips and tricks, suppose you were here, how are you going to trade it? So you know the flag correction, you know the structure of the flag correction, you understand the Elliott wave theory. Now it's time to put that knowledge into practice, placing a trade. This is about practical flag correction, trading tips and tricks. So what do we need to do? Okay. Apart from everything else that I've said so far, we know that for the flag correction, we apply the Fibonacci extension to the A part of the flag correction. And we know that the C part of the flag correction can end at the low of the A part of the flag correction, as I mentioned in one video before, but I'm not repeating myself. We are analyzing Gilead Sciences Incorporation, talking about practical, okay, flag correction trading. All right. So that's the first part where the low of the A part of the flag correction, that's where, see here, as it's pulling back here, some traders took profit here because they are aware of that. The price bounced up big time, only to come back down. Next level, where the C part of the flag correction may end, is at 138.2% Fibonacci extension level. Color that one into pink. 138.2% Fibonacci extension level of the A part of the flag correction. And another level is 161.8% Fibonacci extension level. And the last level that it can stop, though it can go beyond that level, all right, is the 200% Fibonacci extension level. Don't forget what I said to you before, that the first wave, the third wave, and the fifth wave of the C part of the flag correction can be subdivided into 5. Those waves are corrective waves. They can overlap. They do not have to, okay, respect the Elliott wave rule that is applied to the normal, okay, multi-wave. All right. So now we are at 161.8% Fibonacci extension level. We know that that C part of the flag correction can stop here. So looking at this flag correction now, suppose that there is no extension of the third, okay, wave of the C part of the flag correction. So we will say 1, 2, 3, 4, 5. Now we are at 161.8% level. Practically speaking, we will be looking for trading setup in this zone. Is there a trading setup? Yes, there is a bullish engulfment. See, this candlestick bar is closed. This is the month of June. And this is what we call a bullish engulfment. Price was bearish before. Now it opened here, even went above, okay, the high of that bearish candlestick bar. This candlestick bar here almost has the double size range of this tiny bearish candlestick bar. So we have a bullish engulfment at 161.8% Fibonacci extension level of the A part of the flag correction. We know that the stochastic was oversold, and the crazy stochastic trader who do not bother to go to stochasticmarket.com to learn to trade the stochastic indicator, or at least to make fun of them a bit, were buying. You can see here the shadow on top of those things. They were buying, hoping that it would go up. Use a top-down trading method. In fact, I recorded a video recently that I posted at the 24 Stock Trader YouTube channel. The title of that video is how to trade a stochastic indicator using a top-down trading method like a pro. So if you were part of this group buying here as the price forming the C part of the flag correction, you need to watch that video, okay? To avoid that the video too long, we move on, all right? So we see the bullish engulfment. So what is the next step? All right, what is the next step? We'll implement a top-down trading method because we have a bullish engulfment here. It doesn't mean that the price will definitely go up. If the signal is good and we select a low-risk entry point, we'll enter. As we enter, we need to be very careful because We are not out of that channel yet. On the, you see, if we draw, see the trend line that I'm drawing now. Pay attention to the red trend line connecting the high here to this point. We are stuck below it. Though we have a bullish engulfment, it is below that red trend line. This stock will become truly bullish if we manage to go above that trend line, and most importantly head above the $74.76. So we are at a tricky place where we have the bullish trading setup at a 161.8% Fibonacci extension level, a possible reversal point for the C part of the flat correction. So all we can say, prior to bullish signal above the 161.8% Fibonacci extension level, the price level is corresponding to $66.87. That's the green line on my chart. And prior to bearish signal below it, and attention to that red trend line. Now we are talking about practical flat correction trading. All right. So, in order to control the risk here and make the correct decision and avoid that, to buy only to see the price coming down more to the 200% level, we must use what? A top-down trading method. So let's go to the signal time frame. Is the daily chart. I talk about this 100 times. So on the daily chart, is there a signal? Our red trend line is still here. So on the daily chart, what is happening, my friend? Recently, we have this trend line, common sense trend line. I talk about this also. I recorded a video. I will be posting it at 24 Stock Trader YouTube channel. The power of the common sense trend line. Stay tuned at the 24 Stock Trader YouTube channel. If you are trading stock, I recommend to those who are trading stock to subscribe to 24 Stock Trader YouTube channel. Digit 2, digit 4 Stock Trader YouTube channel. So we have this trend line here. Which color should I use now? Okay, let's use dark green. Pay attention to that trend line on the daily chart. This is the signal time frame for the monthly chart. It breaks above it nicely, but it's still below that red trend line. So there is no signal yet. The signal may be probably pulling back to form a higher low to retest, probably to come back and retest the level of $66.87 and form a higher low there. That will constitute the signal, or a pullback all the way to retest this trend line, which I doubt because this support level is quite significant. A pullback to retest the trend line and start a change in direction a bit. All right. So pull back, common sense trend line here is kaput. They start changing direction a bit. That will constitute a signal, and then we go to the hourly time frame, looking for a low risk entry point after the signal is fired on the daily chart. All right, that's it. All right. I will not say more. We leave it as it is. So those are the things that we need to do. So you see now, so though somebody who understands the Elliott wave flat correction may identify the flat correction, if that person does not handle it properly, that trader may end up losing, though that person perfectly understands the Elliott wave theory and is able to focus the market. So we want to combine our Elliott wave trading, Elliott wave strategies with the top-down trading method, understanding exactly what is happening. Okay, this is about practical Elliott wave flat correction trading tips and tricks. So to summarize this video, we see a flat correction that is developing. One more thing I will say to traders: when a flat correction is developing, it's not fully fledged completed. Trader can sell at 138.2% for the expanded flat correction for the big wave in that zone, looking for a trading setup. You see, there was a trading setup here. The inverted hammer was here in that zone. All right, and the trader sold it down to the next support level, which is the low of the A part of the flat correction. All right, one step at a time, we can take it. So now we know that the B is completed. Now the C is underway. We see this move down, followed by the second wave of the C wave. We can again join again here, add to our position here. We can also add to our position here because we know that it must go down more. As it's going down, we are watching the support level. You see this one, they push it down, it's going to stop here, this one stop here. Because traders know that it can stop at the low of the A part of the flat correction. It can stop at 138.2%, 161.8%, and the 200% level, even go below it. I remind traders, as I mentioned before, that the first wave, the third wave, and the fifth wave of the C part of the flat correction can also be subdivided into 5 minor waves, though this is not a multi-wave, and those waves can overlap each other. So as things stand now, we have 1, 2, 3, 4, 5. Probably this is the end of the C part of the flat correction, or the third wave of the flat correction is being extended. We use a top-down trading method to trade it. If you want to buy at the end of the C part of the flat correction, one must have a good reason. The good reason is the trading setup. Is there a high probability trading setup? If there is, yes. Now, how do we manage it? We use a different time frame trading method to trade it. All right. If the signal fails, what do? We close the trade. All right. So you can hit that we want to pay attention to the price structure. All right. So hit that red trend line. It's funny resistance. Well, we sell it, bring it down again, and see what will happen. All right. We don't want to use the stochastic anyhow. You can see here stochastic was oversold. All right. Here it is, price going down nicely. All right. If you have any question or suggestion, this is your time to put in the comment section, and in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah blah blah, let us know by giving us the thumbs down. If you think that this is an essential tutorial that will help other flat correction traders, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about practical area wave, flat correction, trading, tips and tricks. Happy trading to you all and speak to you soon.